Bitcoin's sitting right at a critical decision point, and I'm going to walk you through exactly what the numbers are telling us. As of November 11th, 2025, just before 9 p.m. UTC, Bitcoin is trading at $102,850. We're breaking down the complete one-year picture here from the low at 74,508 back in November 2024, all the way up to the peak at 126,200 earlier this year. By the time we're done, you'll understand exactly where the critical support and resistance levels sit, where Bitcoin is positioned right now in that range, and what has to happen for the next major move either direction. Think of this like building a mental map. I'm going to give you the framework so you can follow Bitcoin's movements even when you're not watching a screen. Let's break it down. First, let's establish the boundaries, the floor and ceiling, that define this entire year. Picture a range. The bottom sits at 74,508. The top reaches 126,200. That's the complete span we're working with. From bottom to top, Bitcoin rallied 69% over this 12-month period. That's a substantial move, nearly 70% gains before the correction started. Now, where are we in that range right now? At 102,850, Bitcoin is sitting in the middle zone above the halfway point, but below the upper levels. Imagine that range like a building with multiple floors. Bitcoin started at the ground floor around 74,000, climbed all the way to the penthouse at 126, and has now come back down to somewhere around the middle floors. Not at the bottom, not at the top, right in the neutral zone, where neither buyers nor sellers have clear control. This positioning matters because it tells us the year's gains haven't been completely erased. We're still well above where we started, but the momentum from the peak has faded. The market is in what you might call equilibrium territory. And that's where those Fibonacci levels come in. They show us exactly which floors matter most as Bitcoin decides whether to climb back up or drop further down. Stay with me. Here, these next levels I'm about to explain are going to be the key to understanding every move Bitcoin makes over the next few weeks. Imagine 5 key floors between the bottom and top, each one acting like a landing where price either rests or gets pushed away. Let's walk through them from top to bottom. Starting from the top, $114,000. This is the first major level below the peak at 126. Think of this as the first floor down from the penthouse. It represents a 24% drop from the high, relatively shallow, which usually means strong demand is still present. Right now, Bitcoin is about $11,000 below this level. That tells us we've dropped past the shallow correction zone. This 114 level is now acting like a ceiling overhead every time price has tried to climb back toward it. Sellers have shown up and pushed it back down. Moving down to the next floor, 106,453. This is crucial because Bitcoin is sitting just $3,600 below this level right now. This zone represents a 38% retracement from the peak. Historically, when corrections pause around this level, it means the underlying trend is still intact. The fact that we're hovering just underneath it, that's the market deciding right now whether buyers will defend it or sellers will push through. This is the battleground. Price testing this level as we speak means the decision is happening in real time. Here's what you need to understand about this level. It's not just a random number. The market has memory, and this is where buyers and sellers previously found balance. Third floor down, the midpoint at 100,354. This is exactly halfway between the yearly low at 74 and the high at 126. Imagine cutting that range perfectly in half. This is where it lands. Right now, Bitcoin is sitting just $2,500 above this midpoint. That's significant. When price trades near the 50% level, neither bulls nor bears have structural advantage. It's neutral ground. Think of it this way. If Bitcoin holds above 100,354, bulls can argue that more than half the year's gains are still intact. The uptrend is damaged but not broken. But if price drops below this midpoint, that's when the correction enters a new phase. Below the halfway point, you're giving back more than half of the entire yearly rally. That's when the structure shifts from correction with an uptrend to potential trend change. Fourth floor, 94,254. This is the golden ratio level, about $8,000 below where we're trading now. The 62% retracement. This is where deeper corrections typically find support if the macro trend is going to survive. Markets that break below this level often see the entire trend come under question. Right now, there's a cushion between current price and this zone. That midpoint we just discussed acts as the first line of defense. But if both the midpoint and this 94 level fail, that's when the yearly uptrend is in serious jeopardy. Bottom floor before the actual yearly low, 85,570. This is deep correction territory, 79% retracement of the entire year's move. At this level, you'd be erasing nearly 80% of all the gains. This only becomes relevant in a major breakdown scenario, likely triggered by external shocks or fundamental breakdowns. For now, this acts as the ultimate safety net, the last major support before the actual yearly low at 74,000 comes back into play. Notice how each of these levels represents a different level of correction severity: shallow at 114, moderate at 106, neutral at 100, deep at 94, and extreme at 85. The market isn't random, it respects these mathematical zones. Two levels define everything happening right now. Let me explain what breaks or holds at each one would mean. Let's talk about what's holding Bitcoin up right now. That midpoint at 100,354, we're sitting just $2,500 above it. Think of this as the floor underneath Bitcoin's feet at this moment. If price holds above this level, the structural argument for the yearly uptrend stays alive. Bulls can point to this and say, look, we're still holding more than half the gains, this is just a correction, not a reversal. But what happens if Bitcoin breaks below 100,354? The next support doesn't show up until 94,000, that's about $8,000 down from here, roughly an 8% move. That's not something that happens in an afternoon. We're talking several days to potentially a week or two of selling pressure if it builds. And breaking the midpoint changes the narrative. Suddenly you're below halfway, giving back more than half of the year's rally. That's when traders who bought the dip start getting nervous and cutting positions. If you're listening to this wondering, how do I know if support is actually breaking or just getting tested, here's what to watch for. The speed and volume of the move now, what's keeping Bitcoin from climbing higher. That 106,453 level, we're $3,600 below it right now. This is the ceiling. Every rally attempt over the past few weeks has run into supply at this level. That tells us something: there are sellers waiting here. Maybe it's holders from higher prices trying to break even. Maybe it's shorter-term traders taking profits. Either way, supply shows up consistently at 106. For Bitcoin to have any shot at resuming the yearly uptrend, it has to reclaim this level and hold it. Not just touch it briefly. We've seen those failed attempts already. I'm talking about breaking above 106, closing above it, coming back to retest it without breaking below, and then moving higher. That's a clean break. If that happens, the next target becomes 114,000, that first level we discussed. But until 106 breaks decisively, it's acting like a lid on price, capping any upward momentum. So where does that leave us right now? Stuck between these two levels, 100,354 support below, 106,453 resistance above. That's about a $6,000 range where Bitcoin is essentially trapped. The volume has been medium, not the intense panic selling you'd see in a crash, but also not the aggressive buying that signals strong accumulation. The RSI sitting at 40.66 tells us momentum is neutral with a slight negative lean. And the trend strength rated at 2 stars out of 5, that's classified as uncertain. The market itself is saying we don't know which direction yet. Both sides are waiting for confirmation. Let's map out the upside targets, but I'm going to be realistic about what has to happen first to even make these relevant. First target: if Bitcoin breaks above the yearly high, 140,260. That's about 11% above the previous peak at 126. Now let me be clear about what has to happen to get there. Bitcoin is currently at 102,850. To reach 140, price would need to, first, break above 106 resistance, that's $3,600 up. Then work through 114,000, another $8,000. Then break the previous high at 126, another 12,000. Then extend beyond to 140. That's not a 2-week journey. We're talking months of sustained buying pressure if it happens at all. This extension typically signals the correction is completely over and a new leg higher has begun. Now, here's what most people get wrong about these targets. They hear the number and think it could happen next month. But price has to work through every level we've discussed. It doesn't teleport. Second extension, 147,600. That's 17% above the yearly high. Markets that reach this level after a deep correction have proven strong momentum recovery. But getting here requires more than just technical bounces. You need fundamental catalysts. Whether that's institutional buying waves, favorable regulatory news, broader market risk-on sentiment. This isn't just about chart patterns. Real money needs reasons to flow in at these elevated levels. And remember, the path there goes through 141st. These targets build on each other. You can't skip levels. Third extension, the full parabolic target, 158,145. That's 25% above the yearly high. If Bitcoin were to reach this, it would signal complete reversal of the correction and establishment of a new macro uptrend. But let's check back into current reality for a second. We're at 102,850, sitting below resistance with uncertain trend strength. For these extension targets to become relevant, the entire market structure needs to flip. Bitcoin needs to prove it can hold that 100,000 midpoint, reclaim 106 resistance, rebuild momentum through 114, challenge the highs, and then extend. These are mathematical projections showing where the roadmap leads if the trend resumes. They're not predictions of what will happen, they are possibilities if conditions align. Right now, these targets are distant. The immediate question isn't when will we hit 140, it's can Bitcoin hold above 100,000 or will it break below? Can it reclaim 106 or get rejected again? First things first. The extensions show us the potential end game if bulls win. But the current battle is still being fought much closer to where we are right now. Now let's walk through what happens if current support doesn't hold and the correction extends deeper. If Bitcoin breaks below 100,354, that midpoint we keep coming back to the first thing that happens is psychological. You're now giving back more than half of the year's gains. That changes trader sentiment quickly. The next support doesn't arrive until 94,254. That's about 8,000 below current levels, roughly an 8% drop. This wouldn't happen overnight unless there's a panic event. More likely, it's several days to a week of consistent selling pressure, wearing down the midpoint, until it finally gives way. Watch for how it approaches that level if we get there. Does it drift down slowly on declining volume suggesting exhaustion, but not panic? Or does it drop quickly on expanding volume, indicating aggressive selling? The character of the move tells you as much as the price level itself. This is typically where people start panicking, but here's the thing: corrections aren't crashes. They are the market testing whether the move up was real or if it went too far too fast. If 100,000 fails and we push down to 94,254, we're at that golden ratio level, 62% retracement. This is where the market asks the big question: is the yearly uptrend still valid, just correcting deeply? Or is something fundamentally changing? At 94, Bitcoin would have given back about 62% of the entire year's rally. Historically, this is where major trends make their stand. Hold 94, and you can rebuild the bullish case. Break below it, and the conversation shifts from when do we rally to how deep does this correction go. The more extreme scenario takes us to 85,570. That's about 17,000 below where we're trading now, roughly a 17% drop from current levels. For this to happen, you'd likely need a macro shock, significant regulatory crackdown, broader financial market crash, or fundamental breakdown in crypto market structure. At 85, you're erasing 79% of the year's gains. The yearly uptrend would be severely compromised, if not completely invalidated. This remains the floor before the actual yearly low at 74,000 becomes relevant again. Right now, this isn't the base case, it's what happens if multiple support levels fail in sequence. But it's important to know where that ultimate floor sits. The price levels tell us where Bitcoin is, the indicators tell us how strong the move is, and what to watch for next. The RSI currently reads 40.66, that's neutral territory, with a slight bearish lean. We're not oversold, which would be below 30, and we're definitely not overbought. This reading tells us selling pressure has been steady, but not panicked. An RSI around 40 often marks inflection points: either momentum continues lower toward oversold, or it turns back up toward 50, which would signal stabilization. Watch for RSI to either break below 30, that would indicate oversold conditions, where bounces often start, or push back above 45, which would suggest buyers are regaining some control. Bitcoin is currently trading 7.87% below its 50-day moving average at 111,638. That's meaningful separation. When price deviates more than 5 to 8% from its moving average, one of two things usually happens. Either price bounces back toward the average like a rubber band snapping back, or the average starts declining to meet price, which indicates a trend change is underway. Right now, that average at 111.6 acts as overhead resistance. If Bitcoin can close back above it and hold, that would be a strong technical signal that the correction phase is ending. Here's what makes these readings particularly interesting right now: they're both showing the same thing, neither extreme. Not oversold panic, not overbought euphoria. Just neutral uncertainty. Volume has been medium, not the intense activity that characterized the peak at 126, and not the panic selling you'd see in a crash. This medium volume during a correction often means participants are waiting for confirmation before committing capital either direction. The 2-star trend strength rating confirms what the other indicators are saying: uncertainty. The market doesn't know yet. Both sides are waiting. Let's bring everything together. Here's what actually matters for Bitcoin's next major move. Bitcoin sits at $102,850 in the middle zone of its yearly range, just $2,500 above the critical midpoint at $100,354, and $3,600 below resistance at $106,453. Price is trading 8% below its 50-day moving average. RSI shows neutral momentum with slight negative bias. Trend strength is uncertain. The structure says we're at an inflection point. Neither bulls nor bears have one yet, but momentum slightly favors sellers until proven otherwise. If you take away one thing from this entire breakdown, it should be this: the next major move depends entirely on what happens at these two critical levels. Two levels define everything right now. First, resistance at $106,453. Bitcoin needs to break above this and hold it as support to have any shot at resuming the uptrend. If it does, we're working toward 114,000 first. That's the next step up. Then potentially retesting the yearly highs at 126 over time. That's the path higher, but it requires multiple confirmations over weeks, not days. Second, support at 100,350 for the midpoint. This is the defensive line. Hold above it, and the argument that this is just a correction within an uptrend remains valid. Break below it, and we're testing 94,000 next the golden ratio level. That would represent a much deeper correction, calling the yearly uptrend into question. Watch which level breaks first up through 106 or down through 100. That tells us the direction of the next major move. The Fibonacci structure we've walked through today continues to guide Bitcoin's behavior exactly as the mathematics suggest it should. These levels aren't predictions, they are the framework the market has respected all year. No hype, no guesses, just the structure showing us where the critical battles are being fought. That's where Bitcoin stands on November 11th, 2025. That's what to watch.